GKFX Prime presents the week ahead. Hi everyone, as I'm looking ahead to the coming week in markets, I'm going to hone in on the fascinating development in the oil market, which, can I remind you, crashed 66% in just the first quarter of this year. I will also dive into the highlights in the week's economic calendar. Before I do, can I ask that if you are enjoying these videos, please click the like button and please make sure to subscribe so we can bring you more videos. So it's worth mentioning up front that this is a shortened week for stock markets because of Good Friday. FX markets will be open on Friday, but volumes will likely be thinner than usual. The big announcement will be US jobless claims, oil inventories, and FX reserves. Jobless claims give us the most up-to-date hard economic data on the US economy we can get. And they are painting a very bleak picture, with millions of Americans out of work. Oil inventories I'll cover in just a minute. We do have a rate decision from the Reserve Bank of Australia and FOMC minutes, but since central banks are doing things in between meetings to deal with the crisis, they are not such a big deal. What I'm watching for clues on how to trade oil is inventories data. For those not familiar, this is the amount of oil held in storage in the United States. It's basically painting a picture of oil supply and demand. If there is lots of oil in storage, then the oil that's produced is not being used, indicating a weaker oil market. Last week we saw 13.8 million barrels of oil in storage. That was over 8 times the 1.6 million barrels the week before. Why did this happen? Because oil is experiencing an unprecedented demand shock at the same time as an oil price war. Americans, like people all over the world, are being told to stay in their homes and not drive their cars, while factories are being closed. At the same time, Saudi Arabia in particular is producing as much oil as it can, flooding the market with unneeded oil. Here's the potentially crazy thing that could happen this week. Oil prices might actually turn negative. Now, hold on. I'm not talking about Brent and WTI futures contracts that we trade, but the prices local oil producers are being paid. Imagine this. A local oil well, maybe in Texas, has produced 100 barrels of oil, but refineries are closed and he has no place to store it. This producer will actually pay to get rid of the oil. If this situation materializes, it will be tough to get a durable recovery in the prices. Okay, good luck with trading this week, and please remember to like and subscribe.